So, what on earth does a potential peace deal in Iran have to do with your retirement account? Well, as it turns out, a whole lot. A single headline recently sent this massive shockwave through the global markets, and we're going to break down exactly how and, more importantly, why.
Okay, so the first thing everybody noticed was on Wall Street. US stocks just shot up, having their best day in months. I mean, it was a huge green wave, the kind of day that makes investors really, really happy. But was that the real story?
Here's the thing. While all eyes were on the stock market, the real clue, the key to understanding what was actually going on, was hiding in plain sight in a completely different part of the financial world.
So here's our game plan. First, we'll look at those big market moves. Then we'll get into the geopolitical trigger, the Iran peace factor. We'll do a super quick Bonds 101 refresher so we're all speaking the same language. Then we'll see how it all led to a market-wide sigh of relief. And finally, we'll talk about why any of this matters to you. All right, first up, markets on the move. Let's just take a quick snapshot of what happened on this crazy day.
And when I say it was a rally, I mean it was massive. The Dow jumped over 1,100 points. The S&P 500 climbed almost 3%, and the Nasdaq surged nearly 4%. It was just a sea of green, the best single day for the market since May, all because of this sudden jolt of investor confidence.
Okay, but like we said, the stock market was only telling half the story. The real detective work, the real insight, begins when we look over at the U.S. Treasury market. You know, the thing that's often seen as the backbone of the entire global financial system. And here is what we see. The yields, or the return you get, on the 2-year and 10-year Treasury notes both fell. Now, a few basis points might not sound like a big deal, but in the multi-trillion-dollar bond market, trust me, that's a seismic shift. This little drop right here, that's our big clue. So what could cause such a sudden change in mood? It wasn't some boring earnings report or a decision from the central bank. Nope, it was all about geopolitics. Let's get to the trigger. This is the moment right here. Everything changed with this statement from President Trump. It signaled a huge de-escalation in the Iran conflict, and those specific words, "end its war," sent an incredibly powerful message to investors everywhere that the risk of a major conflict was suddenly fading fast. And, this wasn't just some random off-the-cuff comment. It was backed up. We saw reports from major outlets like the Wall Street Journal and the New York Post that reinforced this idea. So the market saw a consistent story of de-escalation unfolding, and it reacted instantly. Okay, so to really connect this headline to the numbers we just saw, we need to make sure we're all on the same page with some of the language. So let's do a quick, painless refresher. First up, that term basis point. It sounds way more complicated than it is, I promise. It's just 1/100th of a percent. That's it. It's just the standard way people in finance talk about tiny changes in interest rates so they can be super precise. So when a yield drops by 4 basis points, it's just dropping by 0.04%. Simple as that. And that brings us to the most important piece of the puzzle, the bond market seesaw. Just think of it like this. Bond prices and bond yields are always moving in opposite directions. So when lots of people want to buy bonds, the price goes up, but the yield you get from them goes down. It's an inverse relationship. Remember how those Treasury yields fell? Well, that tells us that just before the stock market rally, bond prices were actually going up. Okay, so now we've got all the pieces. Let's put them all together and see exactly how one piece headline created what everyone on Wall Street calls a relief rally. So check this out. It's a total mood swing. Before the news, during times of high tension, investors want one thing: safety. Money pours into so-called safe haven assets, like U.S. Treasury bonds, because they're seen as the safest thing on the planet. All that demand pushes bond prices up and, you guessed it, yields down. Then, the piece headline hits: relief. Suddenly, that fear evaporates. Investors are willing to take on more risk to get a higher return. So that money rotates out of the safety of bonds and into riskier growth-oriented things like stocks. That massive shift of capital is what we call a relief rally, and it's exactly what fueled that incredible day on Wall Street. So after all that, what's the big takeaway? I mean, why should you really care about any of this? Bond yields, geopolitical headlines? Let's connect the dots. The most important lesson here is this. Global politics and your personal investments are not in separate universes. They are deeply, deeply connected. A single quote from a world leader can change the entire psychology of the market in a split second, shifting trillions of dollars and basically changing the financial weather forecast for everyone.
And that really brings us to our final thought. Now that you know that the bond market often acts as this incredible barometer for global risk and investor fear, the next time you see a major world event in the news, what are you going to watch first? Are you going to watch the flashy stock market numbers, or are you going to look for the deeper, quieter story that's hidden in the Treasury yields?